March 31st, 2025. Here we are at the Silver Squeeze 2.0. However, it seems like we're at version 7.735. I've lost count, to be honest. But we're going to talk about what one analyst feels about where silver's price is going, considering the silver market, and the shocking advice that he is giving us on how to deal with it. Let's discuss it as we explore. Are you buying silver today? Post in the comment section down below. If you've been following my channel this time around, as was the case last time, I actually think we should not be buying on a certain day. We should not do a coordinated buy effort. I don't think it's going to have much of any effect about what we do. Notwithstanding, there are other factors that are playing a role in the silver market right now, which is calling for many to assess that silver's price is going to go very high, to the moon. I am bullish on silver. Make no mistake about that. I still think we're going to see at least $36 an ounce by the end of the year. But there are others that think it's going to go a lot higher and a lot quicker. I'm going to be referencing an article here by John Rubino, that was shared with me by Tony Erickson, that gives us a little bit of what he feels is going to be happening and the reasons for it. And we're going to kind of assess it for ourselves as well too. But what got me the most interested in this piece is the advice that he gives on how to deal with this. Now, if you are ever in the market to buy, for whatever reason, and again, I caution you for your motivation for buying silver, but nonetheless, check out summitmetals.com. They have very competitive prices. In fact, they've got a sale going on right now through today, and I'm going to post a link in the description below, but only if your personal finances and your level of understanding is as such that you understand the long-term proposition for silver, that you should buy from anywhere. In a recent interview, veteran financial analyst John Rubino delivered a stark warning about the precarious state of global finance and the imminent potential for a dramatic surge in silver prices. Rubino, a respected voice in the precious metals community, I actually had never heard of him before. Does not mean he's not respected and well known. I've just not been heard of the name. He outlined that a confluence of geopolitical and economic factors that he believes could trigger a massive shift in the silver market, potentially stripping established powers of their ability to suppress its value. Rubino, known for his insightful and often contrarian perspectives, engaged in a wide-ranging discussion with Capital Cosmos host Danny, touching upon everything from easing nuclear war fears to the alarming rise in global debt. But the central theme revolved around unique dynamics of the silver market and the forces that could propel it to unprecedented heights. Now, acknowledging a recent decrease in the immediate threat of a large-scale military conflict, Rubino cautioned against complacency. He argued that underlying economic vulnerabilities and potential governmental missteps continue to pose significant risks. This backdrop of uncertainty, he contends, further strengthens the case for holding precious metals as a safe haven. And I tell you what, holding is the key word here in my view. That is a theme that I've been carrying out. Once you buy, no matter when you buy, I think we should hold and not drop like I just did right there. Yes, holding on to your silver. And a lot of the silver that you see here I've had for a little while. And I've enjoyed watching the price go up as I've held. That's the reward, folks. And that reward is satisfying. But even if it were to scale back somewhat, I'm still going to be ahead, even adjusted for inflation, from the time that I bought most of this silver that you see before you here. It's pretty amazing. And so this is something that the author, or this particular person, Rubino, admits to, and says, there's going to be things that happen that are going to move the market and move the needle in one direction or another. But he believes that silver in the market itself is on the brink of a major breakout. His analysis painted a particularly bullish picture for silver. He highlighted the metal's historic undervaluation relative to gold, the growing industrial demand, and the increasingly tight physical supply. Well, that increasingly tight physical supply is certainly something that we should consider, but that's been the case for the last 4 years. And it has had some impact, I believe. That is part of the reason why the price has gone up. We've already seen evidence of that. And likely, if it continues to be the case, and there's more demand than there is supply, we should see silver continue to climb at a healthy pace. That's the key here, healthy pace, much as what we've been seeing recently. It's been moving up at a healthy, natural market moves to the upside, really throwing out and in defiance of price suppression or manipulation. So there's that. Now, the undervaluation relative to gold is a direct relation to the gold to silver ratio, which I think in a sense we should be through making any kind of bets on where silver is going to go because of what the gold to silver ratio should be or what we think it should be. No one really knows what that new normal is going to be. I think it's undervalued because of that as well. However, I don't know that it's necessarily going to go back to any level of normalcy anytime soon. In other words, below 75 to 1 or below even 80 to 1 at this point. It's crazy how consistently high the ratios have been to each other. It could easily be that silver is going to start its big run now, Rubino stated, emphasizing the historically high gold to silver ratio as a key indicator. In every precious metal bull market, gold goes up, and it goes up, and it goes up, and silver tends to languish for a little while. And then towards the end, everybody starts thinking in physical terms, and they switch to silver. That is a pretty big leap. It is quite possible that it could happen. But I think it's a matter of time so far that it's not born itself to be the case, but it could happen. I don't rule out that possibility. He elaborated on the mechanics of the silver market, noting it's super thin. It is a tiny market, physical availability, and the highly leveraged nature of the paper market. That combination, according to Rubino, creates a scenario where a significant influx of investment demand could trigger a rapid and substantial price increase. And I would disagree with him on this because the number of those who buy it for investment, well, it just depends on how you measure that, because of the derivatives market, in other words, paper versions of it, where you utilize these to buy it in ETFs, I guess there's a possibility, but that's going to just put temporary pressure, keyword being temporary, on the silver market for a time, to such a time where they've got time to be able to leverage it, to pull it together, pull the silver together. And I think that is what happened in a sense back in 2011 when the price went up so much. There was leveraging, margin calls, kind of forced to sell, and a lot of that could happen again. And in a sense, in some aspects, that's what happened in February of 2021, where the silver squeeze 1.0 occurred. Nonetheless, there's other factors that play a role here, but in terms of physical bullion, much like what you see here, there's no amount of that buying that's going to have any impact at all on the overall price of silver. It's just going to potentially or temporarily maybe wipe out some of the stockpiles and the bullion dealers like it did last time, only to see premiums rise the next time. And then people get jaded because the dealers have raised their premiums. Well, newsflash, that's how the market works. They're going to raise their premiums. That's the name of the game. They need to be able to, throttle it back or whatever and still make money, especially if there's a supply bottleneck. Now, if all the investment demand that is potentially out there in the world comes into the silver, it could swamp everything that the bullion banks can do about it, Rubino asserted. And so you would just get investment demand replacing industrial demand as part of industrial demand, and it'll still be the moon for silver. That's an extremely large leap. And because, like I said, between 15 to 25% of all silver that is in the market is, as in the case, in the form of bullion. And yes, you can put pressure out there, but it'll take a massive amount, and more than just one day, by the way, too. I believe in buying at your own pace and picking up silver whenever you can based off of your budget to protect your wealth in the long run, not some pie-in-the-sky hope that silver's going to go to the moon. Because I just don't think there's enough force and power that we have. I hate to say it, but that's borne itself to be the case from the last time. And I don't think it's going to be enough to replace the industrial demand. Maybe a part of it, but it could chip away into it a little bit. But that would take an incredible amount to be able to remove that 25% of silver out there. There's just not enough silver. There's just too much silver out there, to put it bluntly. There's too much silver in the market in order for that to have any kind of an effect. So our motivation should be buying and holding steady through the course of time. And we're going to get into that in a moment, because what else is fueling precious metals is central bank actions and debt. And silver is benefiting in part because of that as well, too. Currency stability, geopolitical risk, providing a strong tailwind for the entire precious metal sector. He also pointed out to staggering levels of debt accumulated by the U.S. and other Western nations as a fundamental driver for investors seeking the safety of tangible assets. We've entered the currency death spiral for the world's big fiat currencies, and that would explain aggressive gold buying out there, Rubino explained. He believes this environment will further incentivize investors to turn to precious metals, including silver, as a hedge against currency devaluation. Well, the currency is being devalued, but it's not at an out-of-control pace right now. We are still in an inflationary environment. If we see a recession and low employment, well, we could have a very small stagflationary environment. But it's nothing like we've seen really in the past, even if you use the shadow stats numbers, which many people feel is the most extreme version of it. But it is not spiral. There's not a death spiral. The dollar is not going away anytime soon. In fact, I think, honestly, what's going to happen to the dollar is going to be reset in due course. And they're going to they're going to sell a lot of this idea of incentives to be able to gravitate towards this new dollar, which may revolve around a central bank digital currency down the road. And we know that's not going to happen in the next 4 years, but we'll see. And so it all boils down to the question, are the elite about to lose control of the silver price? And that is something that potentially many people feel could happen, especially when they talk about things like defense contractors and bullion banks and hedge funds and whoever might get involved in trying to suppress the price of silver. I would say the Federal Reserve is the biggest one, and their motivation is just for a stable, strong dollar. But the military, I don't think, really cares. They don't give two poopies. The military doesn't give two poopies what the price of silver is. If they can spend $300 on a hammer, they don't mind if silver goes to $50 an ounce. It bothers them not one bit. The fundamental supply-demand dynamics and the sheer volume of potential investment demand could ultimately overwhelm these efforts. There's a point where there's no real way to stop something from going up if we're running out of which kind of the case with silver. Yeah, there's more of that now than there was in 2021. Fully admit that. But any attempts to artificially depress the price could create an even greater buying opportunity, potentially leading to a parabolic part of this process where we start worrying about the availability of silver, not how much you have to pay for it, but whether you can get it is the most extreme scenario. But this is where his advice comes into play. This is what blew me away. While strongly advocating for precious metals, Rubino advised a measured approach to investing. That's right. Even though he's more bullish than I am on what silver is and what is going to be happening, he says recommended gradual buying and dollar cost averaging. Boom! Dollar cost averaging, exactly right. He also stressed the importance of broader preparedness in the face of potential economic and supply chain disruptions. Exactly right. In fact, there's a phrase by Hoosier Stacker that says, stack your preparedness. It's not just about silver, but other ways to protect yourself, including having a lot of these. Unsound money in case of emergency so that you don't have to spend your silver or sell your silver. You know, it's about being prepared, having preparations, food, water, all kinds of things, because there's other types of disasters that can happen as well, too, as the people who are victims of Hurricane Helene and other natural disasters and all sorts of things with the supply chain disruptions. There's a lot of things besides investing that we ought to be doing, Rubino advised. Amen, brother. There's all kinds of prepping stuff that a reasonable person could be looking at now, because it's completely possible that heading into a currency reset, supply chains can get very, very messy. And silver should be a part of it, no question about that. And so I applaud him for that advice, even though I disagreed a little bit with what his conclusion of what's going to happen with silver. But nonetheless, I'm bullish overall. Let me know what your thoughts are. Thanks again to Tony Erickson for sharing this with me. And let me know what your thoughts in the comments section are below. I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.